Here's a mix-up I hear all the time from California families going through probate. Prop 19 got rid of the step-up in basis, right? No. Those are two completely different tax rules, and confusing them can cost your family real money when an inherited home gets sold. I'm Shanty Soerjono, a California probate and trust real estate specialist, and this is one of the most common questions I get. So let's talk about something called a step-up in basis. This is a federal tax rule found in the Internal Revenue Code section 1014. It's really important to know this right away. This rule was not created by California's Proposition 19. It's a completely separate federal thing. Now, what does basis even mean? Your tax basis is generally what you paid for a property, plus the cost of certain improvements you made. Think of it as your starting point for figuring out gain or loss if you ever sell. Let's use an example. Say John buys a home back in 1995. He pays $200,000 for it. Then he puts on a new roof for $30,000 and does a kitchen remodel for another $70,000. To find his adjusted tax basis, you add those numbers together. 200,000 plus 30,000 plus 70,000 equals a total basis of $300,000. If John had sold that home himself while he was alive for $1.2 million, his taxable gain would have been the sale price minus his basis. So that's 1.2 million minus 300,000, which is a $900,000 gain before any deductions or exclusions. But what happens when John dies? This is where the step-up actually happens. Instead of his heir inheriting that old $300,000 basis, the heir generally gets a brand new basis. That new basis is equal to the home's fair market value on the very day John passed away. So, let's say the fair market value at his death is $1.2 million. The heir's new basis steps up to that $1.2 million. John's old, lower basis is wiped out for tax purposes. Now let's look at what that means in practice with a couple of examples. Imagine the heir sells that home almost immediately, maybe just 2 months after inheriting it. The home is now worth a bit more, say it sells for $1.21 million. What's the taxable gain? You take the sale price, $1.21 million, and subtract the heir's new stepped-up basis, which is $1.2 million. That gives you a taxable gain of only $10,000. Without the step-up, the gain would have been calculated from John's original basis, and it would have been a staggering $910,000. Now, what if the heir doesn't sell right away? Let's say they keep the property for 5 years. During those 5 years, the value goes up again, and they finally sell it for $1.5 million. The key here is that the heir's gain is measured from their stepped-up basis, not from John's original purchase price. So you take the sale price of $1.5 million and subtract the heir's basis of $1.2 million. That leaves a taxable gain of $300,000 before any other allowable adjustments. This is why that date of death value is so important. It becomes the brand new starting point for calculating any future capital gains. Because of this, estates will often get a professional appraisal to establish that value. Now, if the property is going through probate in California, the court may require an appraisal from a probate referee. But here's a critical point. That probate referee's appraisal is for probate administration purposes. It is not automatically the value the IRS will accept for your tax basis. The estate's tax advisor will often rely on a separate, qualified date of death appraisal when it's time to prepare the tax returns. You might wonder, does every single thing you inherit get this step up? Many assets do. Real estate, stocks, bonds, mutual funds, and certain business interests generally receive a step-up in basis. However, some assets, like traditional IRAs and certain retirement accounts, follow different tax rules and generally do not get a step-up. Okay, now let's clear up where Proposition 19 fits in, because this is where a lot of people get confused. Proposition 19 does nothing to the federal step up in basis we just talked about. It does not touch it at all. Proposition 19 is a completely separate California rule that only deals with property taxes. It determines whether the county can keep using the parent's old, lower assessed value for property taxes, or whether they have to reassess the property to its current market value for those annual tax bills. Let's compare both systems side by side with another example. Imagine your parent bought a house in 1988 for $180,000. Because of rules like Proposition 13, the current assessed value for property taxes is only $300,000. But when your parent passes away, the home's market value is $1.5 million. For federal capital gains purposes, your tax basis steps up to that $1.5 million. If you then sell it for $1.51 million, your taxable gain is only about $10,000. Separately, for California property taxes, Proposition 19 now comes into play. If you, the heir, move into the home as your principal residence and meet the legal requirements, you might get some limited property tax relief. But if you keep it as a rental or a vacation home, the county will generally reassess the property's taxable value to around $1.5 million for your annual property tax bill. So you can have a federal step-up in basis that greatly reduces capital gains and a separate California property tax situation that depends on Proposition 19's rules. Now let's clear up two really common myths. First, you might hear people say that Proposition 19 eliminated the step-up in basis. That is false. Proposition 19 changed property tax reassessment rules in California. It did not and could not change the federal capital gains basis rules. Those are two different systems. Second myth, some people believe that for a home to get a step up in basis, it must go through the formal probate court process. That is also false. Property you inherit, whether it comes to you through a will, through a living trust, or through probate, can all qualify for the step up in basis, depending on the applicable tax rules. So here's what I want you to remember. When you inherit a home, your tax basis generally resets to its fair market value on the date of death. That's the step up, it's federal, it's automatic, and it has nothing to do with Proposition 19. Prop 19 is a separate, California-only rule about whether the county reassesses your property taxes when you inherit. One can save you a fortune in capital gains. The other decides what you'll pay in property taxes going forward. They're not the same system, and they don't cancel each other out. One more time, because this is the part people get wrong the most. This video is general information, not legal, tax, or financial advice. I'm a real estate specialist, not an attorney or a CPA, so please talk with a licensed probate attorney and a tax professional about your specific situation. If you're settling in a state here in California and want to understand what a sale would actually look like, basis, Proposition 19, and everything in between, I offer a free, no-pressure consultation. I'm Shanty Soerjono, and I'm here to help you get this right.